Hey, we need help covering this market,
Yeah.
so come on in. Brian Belski, BMO Chief Investment Strategist. It seems to me that the earnings reports, which were supposed to give us a second leg up for the market, are just not coming through the way we thought. What say you?
Well, you have to remember that we are a market of stocks, and there are some companies that have had exemplary earnings. It just seems to me, Stu, that there was a predominant negative tone coming into the quarter, and there was this vacuum of no news, and then most portfolio managers thought, oh, they really believed all the consensus negativity and rhetoric that earnings aren't going to be great. So then they started to act on that. We've had really great really great earnings from some of the best companies in the world, but we're reacting and we're being short-sighted and we're worried about next quarter or whatever. And I think still the next couple of weeks could be dicey because people are still worried about the midterms and they're sitting on their hands. We saw that in new home sales. And so I think that things are just on a very short-term basis being too reactive and too negative.
There's a cloud of negativity because it's October.
Yes.
Here come the midterms. There's China. There's Italy, for heaven's sake. You add it all up, and we're not in a position to go for another leg up on the market at this point. That's roughly accurate?
I think it's a bit more of a buyer strike, right? People aren't really willing to commit. And to me, everybody wants to try to compare to the flash crash in February. It's because we're so short-sighted. We lack such perspective in our markets, in our world. I believe it's more like 97, 98. Kind of feels like, to me, that type of an event when we had things going on, and then we were still in a very strong bull market. This is a correction within a secular bull market. This is not a bear market correction. And I think it's just deplorable, Stuart, that people are like do what I do, that are on TV and in the press talking about, see, the market had to go down. This is good for the market. Yeah. It's never good when people lose money, number one. But number two, America is still the strongest country in the world with the best companies in the world. And now we've just been able to have an opportunity to buy stocks a little bit cheaper in the best earnings environment that we've seen in 50 years.
That's interesting. You're not panicking. You're not saying sell it. You're not saying switch out. You're saying that hold on. Just hold on for a while.
I'm an investor. And we should all be investors. And the majority of my clients that I talk to on the institutional side, Stuart, are so short-sighted. Turnover in portfolios, meaning how many changes they make this year, is the highest I've seen in a generation. And it's because we as equity investors are still playing defense. We're worried about losing our job. We're still worried about the overall flows and money from ETFs taking our money from equities. But do your job. Be an active stock picker. Buy the best companies in the world, which are right here in America. Have bigger positions in those great companies. Some of them have had great earnings, like Boeing, right? And this is one of the best companies in the world. And so we think it's been an under-owned type stock in particular, and we think that is what is going to carry us out of this quote-unquote malaise.
A nice job of hand-holding for our viewers there, Mr.
Thank you,
Belski.
sir.
That was pretty good.
Thanks.
We'll take it. Brian, thank you very much,
Thanks
sir.
for having us.
Yes, sir.